From now. Well, the Social Security program was created 77 years ago today, and it is in dire straits. While the fund currently has over $2.5 trillion in assets, it is set to exhaust them in 2035 and run out of money after that. Newly named Republican vice presidential candidate Paul Ryan co-sponsored a plan to privatize parts of Social Security, but it went nowhere in 2005, and he is no longer talking about it. Joining me now, Todd Schoenberger, managing principal of the Black Bay Group. And Todd, why is he not pushing more a plan? Because I know the markets would love to see the program privatized. Why isn't he talking about it, do you think?
That's right, Cheryl. Look, this obviously would be great for the stock market, but I think what he's doing is he will alienate some of the current beneficiaries of Social Security. I think once you give that feeling that, yes, you are going to throw that personal responsibility on the beneficiaries of Social Security right now, there's a scare tactic. I mean, the stock market clearly with its volatility, obviously some of the rotten apples that we have in the industry right now, we don't actually have the perception of gravitas right now for a recipient to actually say, okay, I'm going to take my money and throw this money into the stock market. It's too much risk.
But Todd, you talk about scare tactics. There's this figure, it shows up in the research. Over the next 75 years, Social Security will scheduled to pay out $134 trillion more in benefits than it will collect. Are Americans ready to even discuss this?
Listen, I got to tell you something. We need to do something right now. Look, you have 310 million Americans. 50% are invested in the stock market. This actually would create more of a savings environment. You want people to understand that if they have their Social Security balances, if they put them in the markets, you want them involved. You want them actually feeling they have skin in the game right now. Right now, people are vulnerable. Get them into the stock market. Create a sense of saving environment. We constantly talk about debt in this country and in Europe and around the globe. Why not have them actually start saving some of their money and actually putting the money to work?
If even Paul Ryan is willing to back off, if you will, his talk about a stricter budget, get the fiscal cliff that is coming kind of dealt with, I mean, maybe they will or will not talk about that, but investors are incredibly frightened right now by what is coming at the end of the year. Do you think it's a smart political move from an investment perspective to say, hey, I'm going to deal with this? I mean, their plan is much better than the president's. Right?
Well, I have to agree with that. But look, you have 84 days until Election Day right now, guys. Look, these are they're very intelligent kitchen table topics. And I think most Americans right now need instant gratification. The President of the United States is great at delivering instant gratification to voters. When you're talking about debt, you're talking about generational items. These are years down the road right now. And I'm not sure Americans actually can understand what goes on when you're talking about balanced budgets and debt and obviously baseline budgeting. I mean, these are very, very high-level topics.
We want to go out with the president and have a beer with him. We don't want him lecturing at us like a policy wonk, which could be Ryan's problem. But you think Obama wins the election hands down in November. Will there be a massive market sell-off?
Absolutely.
Does that mean we shouldn't put our Social Security money into stocks right now?
Well, like Cheryl was talking about, the fiscal cliff. I mean, now they're on summer recess for 5 weeks. What a great vacation. They're going to come back. They work for a couple of weeks. Then they're in election mode. Then there's the lame duck session. Do you think we already went over the fiscal cliff as far as I'm concerned because nothing is getting done? Even Rep. Chris Van Hollen out of Maryland said the same thing at a conference in D.C. 3 months ago. If nothing is done before the summer recess, we are over the fiscal cliff.
But I have to deal with it as an investor now, Todd, and that's the problem. That's our viewers' problems. Is you've got changes in capital gains taxes, huge changes for dividend payers, which you and many other analysts come on this network and say, buy, buy, buy. Well, I'm not going to want to buy a dividend-paying stock at this point, am I?
Completely agree with you because the dividend tax rate is going to hit the roof starting January 1st, and nothing is done with resolution of the fiscal cliff. More importantly, if you are looking at some of these stocks right now, you have to admit there's a bubble being created within dividend-paying companies right now. If you're a company with excess cash, why would you increase your dividend right now? You should be putting the money back into the company because you're going to make yourself that much more vulnerable as a shareholder, plus you're reducing your values.
Or wait till after the election, Obama wins, stocks sell off, then buy your stock back when it's cheaper.
You could try that, but I'm telling you guys, it's going to get really ugly if he wins this election.
Todd Schoenberger, good to see you.
Likewise.
Thank you.
Thank you.